Number 984, electric car sales break new records with momentum expected to continue through 2023. Electric car sales breaks new records with momentum expected to continue through 2023. Electric car markets are seeing exponential growth as the sales exceeded 10 million in 2022. A total of 14% of all new cars sold were electric in 2022, up from around 9% in 2021 and less than 5% in 2020. Three markets dominate global sales. China was the front runner once again, accounting for around 60% of global electric car sales. More than half of the electric car on roads worldwide are now in China, and the country has already exceeded its 2025 target for new energy vehicle sales. In Europe, the second largest market, electric car sales increased by over 15% in 2022, meaning that more than one in every five cars sold was electric. Electric car sales in the United States, the third largest market, increased 55% in 2022, reaching a sales share of 8 electric car sales are expected to continue strongly through 2023. Over 2.3 million electric cars were sold in the first quarter, about 25% more than in the same period last year. We currently expected to see 14 million in sales by the end of 2023, representing a 35% year-on-year increase with new purchases accelerating in the second half of this year. As a result, electric cars could account for 18% of total car sales across the full calendar year. National politics and incentives will help bolster sales, booster sales, while a return to the exceptionally high oil prices seen last year could further motivate prospective buyers. There are promising signs for the emerging electric vehicle EV markets, albeit from a small base. Electric car sales are generally low outside the major markets, but 2022 was a growth year in India, Thailand, and Indonesia. Collectively, sales of electric cars in these countries more than tripled compared to 2021, reaching 8,000. For Thailand, the share of electric cars in total sales came in slightly over 33% in 22, while both India and Indonesia averaged around 1.85% last year. In India, EV and components manufacturing is ramping up, supported by the government's USD 2.2 billion incentive program that has attracted investments totaling USD 8.3 billion. Thailand and Indonesia are also strengthening their policy support schemes, potentially providing valuable experience for other emerging market economies seeking to foster EV adoption. Landmark EV politics are driving the outlook for EVs closer to climate ambitions. Market trends and policy efforts in major car markets are supporting a bright outlook for EV sales. Under the IEA stated politics scenario steps, the global outlook for the share of electric car sales based on existing politics and firm objects has increased to 35% in 2030, up from less than 25% in the previous outlook. In the projections, China retains its position as the largest market for electric cars with 40% of total sales by 2030 in the steps. The United States doubled its market share to 20% by the end of the decade as recent policy announcements drive demand, while Europe maintained its current 25% share. Projected demand for electric cars in major car markets will have profound implications on energy markets and climate growth in the current policy environment. Based on existing politics, oil demand from road transport is projected to peak out 2025 in the steppes with the amount of oil displaced by electric vehicles exceeding 5 million barrels per day in 2030. In the steps, emissions of around 700 megaton CO2 equivalents are avoided by the use of electric cars in 2030. The European Union and the United States have passed legislation to match their electrification ambitions. The European Union adopted new CO2 standards for cars and vans that are aligned with the 2030 goals set out in the Fit for 55 package. In the United States, the Inflation Reduction Act (IRA), combined with adoption of California's Advanced Clean Car 2 rule by a number of states, could deliver a 50% market share for electric cars in 2030, in line with the national target. The implementation of the recent proposed emission standards from the U.S. Environmental Protection Agency is set to further increase this share. Battery manufacturing continues to expand, encouraged by the outlook for EVs. As of March 2023, announcements on battery manufacturing capacity delivered by 2030 are more than sufficient to meet the demand implied by government pledged and would even be able to cover the demand for electric vehicles in the net zero emission by 2050 scenario. It is therefore well possible that higher shares of sales are achievable for electric cars than those anticipated on the basis of current government policy and national targets. As spending and competition increase, a growing number of more affordable models to come to market. Global spending on electric cars exceeded USD 225 billion in 2022, up to 50% relative to 2021. Only 10% of the spending can be attributed to global government support. The remainder was from consumers. Investors have also maintained confidence in EVs, with the stocks of EV-related companies consistently outperforming traditional car maker since 2019. Venture capital invests in startup firms developing EV and battery technologies have also boomed, reaching nearly USD 2.1 billion in 2022, up 30% relative to 2021. With investment increasing in batteries and critical minerals. SUVs and large cars dominate available electric car option in 2022. They account for 60% of available BEV options in China and Europe, and an even greater share in the United States, similar to the trend towards SUVs seen in internal combustion engine ICE car market. In 2022, ICE SUVs emitted over 1 gigaton CO2, far greater than the 18 megaton net emissions reduction from the electric vehicle fleets that year. Battery electric SUVs often have batteries that are 2 to 3 times larger than small cars, requiring more critical minerals. However, last year, electric SUVs resulted in the displacement of over 150,000 barrels of oil consumption per day and avoided the associated tailpipe emissions that would have been generated through burning the fuel in combustion engines. The electric car market is increasing competitive. A growing number of new entrants, primarily from China, but also from other emerging markets, are offering more affordable models. Major incumbent car makers are increasing ambitions as well, especially in Europe, and 2022 to 2023 saw another series of important EV announcements. Fully electric fleets, cheaper cars, greater investment, and vertical integration with battery making and critical minerals. Consumers can choose from an increasing number of options for electric cars. The number of available electric car models reached 500 in 2022, more than double the options available in 2018. However, outside of China, there is a need for original equipment manufacturer OEMs to offer affordable, competitively priced options in order to enable mass adoption of EVs. Today's level of available electric car model is still significantly lower than the number of ICE options on the market, but the number of ICE models available have been steadily decreasing since its peak in the mid-2010s. A forecast expands to electrification of more vehicle segments as electric cars surge ahead. Electrification of road transport goes beyond cars. 2 or 3 wheels are the most electrified market segment today. In emerging markets and developing economies, they outnumber cars. Over half of India's two-wheeler registrations in 2022 were electric, demonstrating their growing popularity due to government incentives and lower life cycle costs compared with conventional models, especially in the context of higher fuel prices. In many developing economies, 2-3 wheelers offer an affordable way to get access to mobility, meaning their electrification is important to support sustainable development. The commercial vehicle stock is also seeing increasing electrification. Electric light commercial vehicle (LCV) sales worldwide increased by more than 90% in 2022 to more than 310,000 vehicles, even as overall LCV sales declined by nearly 15%. In 2022, nearly 66,000 electric buses and 60,000 medium and heavy-duty trucks were sold worldwide, representing about 4.5% of all buses sales and 1.2% of truck sales. Where governments have committed to reduce emissions from public transport, such as in dense urban areas, electric bus sales reach even higher shares. In Finland, for example, electric bus sales accounted for over 55% in 2022. Ambition with respect to electrifying heavy-duty vehicles is growing. In 2022, around 2020 electric heavy-duty vehicle models entered the market, bringing the total to over 800 models offered by well over 100 OEMs. A total of 27 governments have pledged to achieve 100% ZEV bus and truck sales by 2040, and both the United States and the European Union have also proposed stronger emission standards for heavy-duty vehicles. EV supply chains and batteries gain greater prominence in policymaking. The increase in demand for electric vehicles is driving demand for battery and related critical minerals. Automotive lithium-ion and battery demand increased by about 65% to 550 gigawatt-hour in 2022 from about 330 gigawatt-hour in 2021, primarily as a result of growth in electric passenger car sales. In 2022, about 60% of lithium, 30% of cobalt, and 10% of nickel demand was for EV batteries. Only 5 years prior, these shares were around 15%, 10%, and 2%, respectively, reducing the needs for critical materials will be important for supply chain sustainability, resilience, and security, especially given recent price developments for battery materials. New alternatives to conventional lithium-ion are on the rise. The share of lithium-ion phosphate (LFP) chemistries reached its highest point ever, driven primarily by China. Around 95% of the of the LFP battery for electric LDVs went into vehicle produced in China. Supply chain for lithium-free sodium-ion batteries are also being established, with over 100 gigawatt-hour of manufacturing capacity either currently operating or announced, almost all in China. The EV supply chain is expanding, but manufacturing remains high concentrated in certain regions, with China being the main player in battery and EV component trade. In 2022, 35% of exported electric cars came from China. Compared with 25 in 2021, Europe is China's largest trade partner for both electric cars and their batteries. In 2022, the share of electric cars manufactured in China and sold in the European market increased to 16%, up from about 11% in 2021. EV supply chain are increasingly a forefront of EV-related policy making to build resilience through diversification. The Net Zero Industry Act proposed by the European Union in March 2023 aims for nearly 90% of the European Union annual battery demand to be met by EU battery manufacturers, with a manufacturing capacity of at least 550 gigawatt-hour in 2030. Similarly, India aims to boost domestic manufacturing of electric vehicles and batteries through production-linked incentives (PLI) schemes. In the United States, the Inflation Reduction Act emphasizes the strengthening of domestic supply chain for EVs, EV battery and battery minerals laid out in the criteria to qualify for clean vehicle tax credits. As a result, between August 2022 and March 2023, major EV and battery makers announced cumulative post-IRA investments of at least USD 52 billion in North American EV supply chain, of which 50% is for battery manufacturing and about 20% each for battery components and EV manufacturing.